Hey guys, what's up and welcome to a new Tesla update video. So today, let's go over Tesla as per usual and figure out what is happening because, well, the market is closing in about half an hour. I'm recording this a little bit early so I can get ready to look at the earnings and whatnot as it comes out so I can see the stock move relative, etc. But the point is that earnings, of course, is just in a half an hour. So it's going to be a pretty big one, right? This is going to be a massive earnings. Again, the main reason, of course, is because of the price drops relative to the margins, right? Essentially on the vehicles, right? How much did that affect it? Is it lower than, I believe Wall Street is looking for around 18, like 17 to 18-ish%. But I've seen some analysts like Pierre Ferragut talk about how he thinks it'll be like 16, maybe even a little bit lower. And he thinks that this is going to be a little bit of a difficult situation, but of course it'll get better over time, just for now. Now, all that being said, let's get into it. If you enjoyed, don't forget to hit that like button. This is not financial advice, but let's just jump right into it. The first thing I want to talk about before we get into the actual TA is over here. So I'm going to be switching to TranSpider probably like next week, but one thing I like to show look at on TranSpider is it actually has like a good options flow. So we're going to increase this to about 50-ish K. It actually looks a lot different than what I looked at earlier. So when I looked at it earlier, this is what it looked like. I posted to my subscribers over here. You can see, right? Yeah, there's a lot of red over here, a lot less red now, which is interesting to know. Maybe if I make it higher, no, just a lot less red. So people were pretty bearish, and this was before Tesla had this massive tumble. Maybe that's why, because I checked back when Tesla was all the way up here, and then before this massive red happened, there was a lot of red here, like a big red circle you can see right there, which was short-term puts as well, actually. It was pretty short-term. So that's probably why people were playing that short-term put. And now maybe people are actually back to being bullish going into the actual earnings itself. At least what it seems like. There's a lot more calls than puts. You never know though for sure. Obviously, doesn't mean it has to be right. Doesn't mean this has to play out because there's a lot of calls. It has to go up. Not always, of course, right? It's never that easy, especially with earnings. But just, a little bit of, interesting point to pay attention to over here. Now, moving into technical analysis, I'm going to also go over another post I went over here, which kind of sums up everything I've talked about, or all my thoughts really for Tesla's earnings coming up. Now, first and foremost, right, going on, say, on the weekly. The weekly is probably the most important time frame here right now for this overall red trend line. On the daily, we are arguably like kind of dancing around it, kind of going back under it, unfortunately, but still dancing around it, right? Because again, it's not the most perfect line in the world. However, on the weekly, it's actually a lot more accurate of a trend line that I have, right here. You can see as it's touching the peak of this, peak of this, right? You can see, and we're pretty much roughly right at it as well. We're dancing right at the top of it as well. Let me double make sure quickly because it wasn't supposed to be like this, something like this. Yeah, anyway, the point is that we're also on the weekly dancing pretty much right at the trend line. We went up to almost exactly 300 and got smacked back down. And then, the question of course now is, well, what happens post earnings? The weekly is also overbought, right? This doesn't happen very often, but when it does happen, right, it happened all the way back over here in, 2020, right? Then it happened over here, happen over here, and happen over here. But this is a weekly time frame. So even though I keep saying here, this is like over a pretty long period of time, right? Over the past like almost like 4 years now-ish, right? So keep that in mind, right? It's a pretty long period of time. But whenever it does happen, Tesla, more often than not, at least has some form of cool-off post, going into overbought territory. But with that being said, it's only just barely overbought. So technically there's more room to go, honestly. But, that's something else to, of course, consider for another time. But as of right now, we're dancing around the red line. Now, one thing that's important to note here is if you go on the weekly, or daily doesn't matter, but weekly is just a little bit easier to see, and take the Fibonacci and go from the swing high, or sorry, not the swing high, more like the all-time high, and bring it all the way down to this level down here, which is the 100 price target or price level that we were at not that long ago, really, like just a couple months or something like that. And you put it down like this, you can see the 0.618 Fibonacci level is pretty much sitting dead smack at $296, which is kind of where we're so far getting rejected at, which is a pretty massive level as well. The 0.5 is a big level, but the 0.618 is also a major level. Anything above this, in my opinion, and this downtrend is like probably more confirmed to be over, but this is still the last hope that the bears have, right? They really want to defend this kind of 300-ish level for psychological purposes, right? Worst case 350. But for psychological purposes, but also for that 0.618 level, like bears really want to defend this, because if they don't and Tesla can cruise above this, like don't get me wrong, there will still be a cool off, and it is still going to go down overall and have a cool off period with the market, which I do think is coming probably in about a month or so. But the point in there is the fact that if it does break above these levels like I just talked about, then when the cool off does happen, then it's going to be a more bullish cool off. Here, if it cools off from these levels, I still think it'll be a bullish cool off, but it's less convincing of a bullish cool off, aka like it won't go to like ridiculously low levels again. You know what I mean? So that's kind of the way I look at it right there. So keep in mind, that's a pretty crucial level that we're at right now that we did so far get rejected at today. But again, earnings can completely change that if it's a good earnings and we rocket right past it. Of course, if we drop down below. So that's one thing, right? Second thing, like I just talked about, right, being the 296, right? Overall, just rallying into earnings, I find a little bit suspicious. Like I am always a little bit extra cautious about that, right? I do have, again, I did have shares, which I did sell calls for pretty much at 297.5, I believe it was, or like pretty much 300 sold calls for early August. I did enter cash secured puts as well on the dip that we had earlier today. Close to the bottom, actually, not exactly the bottom. I'm pretty close. I was pretty happy about that. Around 291, I think it was, where I did enter some cash secured puts, right? And I'm holding that as well. And that's kind of my play for earnings right now. I don't want to go too risky, right? If it goes up, I make money and I'll be happy with what I make. If it goes down, fantastic. I'll be buying the dip, but obviously those short-term trades will suffer a little bit temporarily. Now, that's kind of what I'm seeing there, right? The weekly is overbought. I just talked about the weekly candle so far is pushing through the massive red line. This is of course before, but the most important thing is that, it's not always about just going above it. It's more important to close above it and hold above it, right? So just because Tesla went above it on the weekly, the red trend line, it doesn't mean that that's like, all's good now. You want to not only close above it on the weekly, especially here, because the longer the time frame, the more weight and meaningful that kind of a movement is. But you also want to especially hold after closing. Closing is the first step. Second step is holding and not collapsing back under like the following day or even week. That's also very important, right? Another one. So this is how I personally foresee Tesla happening. If Tesla's earnings goes well, I think 315 is without question going to happen. Like 315, I think for sure. Easily, like maybe even higher, but easily 315. Like that wouldn't shock me, which is about a 7% move. That's kind of what the market's expecting, about a 7% move. And I do think 315 will be the place to go to. And then I think from there, profit taking will finally begin. Now, if that were to happen and we go to 315, that's when, in my opinion, we actually will be forming this potential cup and handle on the daily, which will be a pretty nice cup and handle. That's when I think the cool off will begin, which will form the handle, right? So we'll go from like here, kind of zigzag like a bull flag. And then I think from there, we'll kind of break out and go up even higher. Of course, this will take some time. I do think this will take a few months overall to play out. I don't think this will happen overnight or something like that. Probably somewhere post September, in my opinion, if I had to take a guess. But that's kind of what I wouldn't be surprised to see happen overall, right? Assuming we go to 315. Now, even with that being said, even if Tesla doesn't go to 315, and let's just say in theory, it doesn't go higher than this. Let's say earnings is a disaster or we sell off or whatever, and we just plummet from here. Even then, I still think this cup and handle pattern is still a very valid cup and handle pattern, even if it stops here. All it will mean is the neckline will be like this instead of straight across. You know what I mean? So to me, regardless, I think it will be a pretty nice cup and handle pattern. And I think the cool off will be that handle that will hopefully, in theory, start forming. So that's one other thing I can see. But on the flip side, of course, if Tesla doesn't do well on earnings or to sell the news event, I definitely think 260s is going to be back into the equation pretty damn quickly. And then we'll see from there how much lower we can potentially go, or if we just bounce from there, or what the case may be. Again, I do think we would ultimately go lower. Like for instance, if let's say earnings is bad, I do think we'll come down to around 260-ish, give or take. I do think we'll get a small bounce from there. And then I think we'll go ultimately lower one more time. And then from there, I think we'll get that bounce, which will also create that cup and handle, the handle of the cup formation potentially as well. So that's kind of what I am seeing. Like I talked about, the main thing to look at for earnings is going to be margins, right? Margins is extremely important for this earning, which I did talk about at the beginning of the video, mainly because of, the correlation to that and the price cuts that Tesla has been doing for the past pretty much this whole year, really. And how much that affects it, right? And if it's anything lower than what Wall Street's estimates are, then that's going to be pretty bad. That won't be good. And then we will get some short-term pain, but who knows for sure, right? I mean, we'll see when the earnings comes out. This is gonna be all eyeballs will be on the margins. So I'm telling you that right now. That's gonna be important as well. And like I said, I am optimistically cautious here, which is why I do have the shares for sold calls, which is like a hedge towards those shares. And of course, I have cash secured puts sitting around $275-ish. I forgot exactly the strike I chose. It was somewhere around 275. That I'll buy shares at if it goes lower than that, which is fine. And that's kind of the way I'm playing it. And that's kind of the way I'm seeing it. So there's not much more to talk about, really. It really just comes down to earnings, guys. This is it. This is do or die. The 21 EMA is right below us at 269. So we'll probably go right to it if earnings is a miss, which will be pretty much a 7% move as well. So I think we'll go right to that, probably bounce off of it for a short-term bounce and probably go a little bit lower as well, consolidate. And then from there, I think we'll build up the new momentum, the new, fresh traders, if you will, and re-entering at what maybe a more suitable and better price level to really start re-entering at, and it's not overly elevated. And then from there, I think we'll continue upwards even higher. But all in all, that's kind of more or less what I am seeing. The Bollinger Band, you can see over here, we're still heavily touching the green line. So The RSI is still a bearish divergence, so there's still a lot of signs that makes me a little bit cautious here. I'm not jumping up and down, buying up here, or making trades up here. That's why I'm being very cautious, because there's still many factors that can potentially make this not so great. And I do think it's still overdue for a cool off. It's just a matter of when, not if. But I am still, of course, trading, and I am still nibbling, and I am still doing stuff to the upside. I'm just being a little bit cautious about it, right? No reason to over leverage, because I personally don't feel like I need to do that. But that's, of course, my own personal situation. Now, all that being said, thank you all so much for watching. Let me know what you think down below. Good luck if you're playing earnings, but otherwise, have a great day. Peace.